Hello and welcome everybody to today's webinar. I imagine we'll have people continuing to come join us over the next couple of minutes, but good for us to get to start and get started with the intros and the housekeeping. So my name's Charlie Dixon and I'm an Associate Director at the Green Finance Institute and also head up market engagement in the UK for the TNFD. And today's webinar is hosted by Green Finance Institute and the TNFD's UK Consultation Group, and it's all about uncovering UK action on TNFD. So we're going to hear from 3 companies in the UK across different sectors that have all adopted the TNFD recommendations. And we're really hoping it's going to help break down some of the key motivations for getting started with the TNFD recommendations, what each of these businesses' first steps have been, and then how that's beginning to help inform action across their organization. Before we get started on the content, a few notes of housekeeping. You might want to put your Zoom into speaker view for the best experience. That's going to make sure that you always have the people that are speaking up on your screen. Today's webinar is being recorded, and so the recording will be available on the GFI Hive website over the next couple of weeks. And we are expecting quite a large number of participants today. So we've disabled microphones, but we do encourage everybody to please submit your questions for the Q&A through the Q&A function on the screen. So you should find that button on the bottom of your screen. There, you're also going to be able to see questions that are submitted by others. And there's an option to upvote questions that you like. So if you see something that is a question that you're really interested in, you agree with, give it an upvote, and then we'll start by answering the questions with the most upvotes in the Q&A function. I hope that all makes sense. So with that, it's a great pleasure for me to introduce our speakers, and I always love it when we have an all-female panel. So today, I'm really excited to be joined by Jessica Marker, Associate at Generation Investment Management, Diane Crow, the Group Sustainability Director at Reconomy, and Carolyn Sampson, Head of Sustainable Banking at Oxbury Bank. So where do we start? So I guess maybe let's kind of start with you, Carolyn, if that's okay. When companies begin to engage with TNFD, a really common initial question we hear is why should we dedicate any time to this? What's the strategic value for us? So to kick things off, I'd really like to ask kind of each of you around the room, what prompted your organization to start reporting in line with the TNFD recommendations and to register as an adopter? And just for those in the audience that might not be familiar with your organizations, it would be great if you could give just a few lines about your organization and what it gets up to. So Carolyn, over to you.
Morning, Charlie. So Oxbury was founded in 2018 and started trading as a bank in 2021. And our aim is to finance farmers in the UK. So we provide financing to the rural economy in its broad sense. And so for us, bringing nature into our processes made absolute strategic sense. We've looked at climate risk from inception. If you're going to be lending to farmers over a 25-year period, which is what we're doing, our average loan term is 21 years, then you have to consider these risks at this point. Because for us, it's about assessing the farmer's ability to repay our loan over that long period of time. And nature is a key component of that. So we've integrated climate and nature effectively from 2022. Now we've considered our customer exposures and therefore the broader bank's position. So for us, it was really quite a logical step, and it doesn't take a lot to explain to people why nature matters if your main exposure is towards agriculture. So in that perspective, we've been lucky, I think.
Great, really, really interesting to hear. So it's really that kind of financial materiality perspective for you then, Carolyn, that's been that driver.
I mean, I keep saying to people, ask me, why do we care? And I go, we're not a philanthropic organization, we're a bank. I expect my loans to be repaid. This is going to be part of what's going to get my loan repaid. So we care.
But it's simply and wonderfully. I like it. Jess, so let's go over to you now. So I think there might be some similarities for your experiences at Generation, in particular, in really wanting to get a handle on those, like which material dependencies and impacts are most important for us through our investments. So can you tell us a little bit more about your motivations for getting started as well?
Yeah, sure. So Generation, we're a sustainability focused asset manager. So similar to Carolyn, but more on the asset management side, another financial institution, but we manage money for people. And we were founded back in 2004 by Al Gore and David Blood. So climate change has been kind of core to our thesis since the start. And I guess over the more recent years, we've become more conscious of that kind of link between climate change and nature. And at first, this was kind of in recognition of the fact that land use change is such a significant driver of emissions. And therefore, net zero wasn't going to be a possibility if we didn't also kind of start to tackle the deforestation problem. So that's our kind of first foray into nature. But then as we were David Blood, one of our senior partners, was part of the TCFD. So naturally, we followed the formation of the TNFD very closely. And we were eager to kind of use those recommendations as they came out to kind of enhance our perspective and to expand that look at deforestation into a much broader analysis of nature across our funds.
Nice. So it's almost kind of very much part of the Generation DNA and a natural progression from all of the involvement that you'd had from TCFD as well.
Yeah, absolutely.
Excellent. So Diane, now Reconomy's case looks quite different, doesn't it? So you're a business rooted right in the center of the circular economy space. So how does your kind of story and motivations compare?
Yeah, so it might help just to say a little bit about Reconomy. So as you say, yeah, we're an international circular economy specialist, based in the UK, or started in the UK, but now sort of operating globally. So sort of in about 180 countries, 4,000 staff, or colleagues, 23,000 customers. We work across all different sectors, sort of a 1.2 billion pound business. And we've been growing considerably, so about 20% growth per year, and that's sort of organic and by acquisition. And really our purpose, we've developed our purpose to be around enabling the circular economy and for a waste-free world. And we do that through sort of three main loops. So we've got a recycle loop, which is around our resource management and materials for customers. And then we also have comply, which is a compliance scheme. So companies are putting packaging, batteries, electricals on the market. And then we also have reuse, which is our sort of logistics and returns globally. So, and we're trying to encourage those sort of more sustainable returns. And I think for us, it kind of went back to 2022 when we had the biodiversity COP and the Montreal framework that came out of that. And I think it just became very clear that the output of that was sort of 30%. We need to protect 30% of land by 2030. And I think the output of that really kind of helped us to realise that kind of crisis that was being highlighted, and how we weren't going to be able to achieve our carbon targets and our net zero targets without nature. And the more circular we can be and we can encourage and enable our customers to be, then the more we can reduce those emissions and reduce that impact on nature. We also have been reporting voluntarily for some years, and we reported against the TCFD for the first time a couple of years ago in a mandatory way, and it just made sense as TNFD came out and was a kind of an integrated standard. It made sense for us to report against that as well, and use the two standards in terms of the governance that we put around that.
Nice. And the point you made at the beginning, I think, is really key about climate, because there's actually lots of businesses where the entry point here is climate, and lots of the things that they've been doing in their climate strategy are also helpful for nature. And nature is a really important consideration if they want to achieve their climate goals. And of course, circular economy is the fantastic example of that, because everything you're doing is both good for climate and good for nature as well. So it's kind of a really natural a natural outcome and benefit from all of the products and services that you have.
Yeah, and absolutely. It's all totally interdependent. So yeah, absolutely. And it helps us to be able to talk to our customers around, what their dependencies are and helping them to understand, as you've just said, if we can be more circular, then it will have those other positive impacts.
Excellent. And I imagine there's probably quite a few businesses on the call that are asking themselves, where do I begin with this? It feels really big. It feels really multifaceted. How can I break it down into something that feels achievable? So could you take us through what those first initial steps looked like for Economy, and maybe on part of that, how you're building on your existing work and climate, for example?
Yeah. So I think it was important to understand what's material to the business. So we have done materiality assessments. But as I've said, even if it doesn't come out as a material topic, which it didn't for Economy, we don't have that kind of direct impact. But we are all dependent on nature, and we certainly feel and know that those impacts are throughout our supply chain. But yes, we did sort of want to get help. That was one of the first things we did, was to join the UK Biodiversity Business Forum, which has been great value, an excellent membership-based organisation to be part of, and you really kind of get that peer-to-peer understanding. There's all sorts of sizes of business in that. Small businesses to the likes of BP and Shell, for example, and from sort of hairdressers all the way up and all the way through the value chain there. So that's been really useful to see what others are doing, and everyone's been very helpful in that. And also we're partners with the Supply Chain Sustainability School, and we're on their nature working group, and they've got some great resources, particularly I guess for the construction and facilities management sectors. They've got some great resources on there, as have the TNFD website. Again, some brilliant tools and resources. There's lots on there, so you just have to kind of find your starting point and use the tools that they've got. So we found those all really helpful. But I think it was just important to get started, really. And one of the things that we did do was to integrate nature into our climate strategy, and develop an action plan. And then from that, we looked at our locations in the UK and Europe at the time, and asked those businesses. We did give them a bit of a checklist and said, what do you think are the impacts locally, and if you've got the opportunity, what sort of actions could you take? And we developed a bit of an action plan. That's been really useful, and I think the LEAP tools that are available as well. So that's around locate, evaluate, assess, and prepare. So there's some really good tools that are freely available as well that we've tapped into. And I think reporting as well. So we have started reporting. It's not complete. We did our first report last year. It's not perfect by any means, but we just felt it was important to start, just to get started.
Excellent, and really interesting to hear how, right at the beginning there were aspects of this that didn't necessarily come up as material, but the more that you've looked into it, there have been some really useful things that it's uncovered and led to some quite helpful actions. So that's really interesting to hear.
Yeah.
And so going from your kind of reflections on your first report, Carolyn, I'd love to turn to you. Now, Oxbury's on I think it's third iteration, is that right? So you're a bit of a veteran in this space. So I'd love to hear how that journey's evolved from kind of first gen all the way to where you are now.
I mean, yes, like Dan, we just had to get started. And it really is important just to get your mind to, okay, we're going to start. Nothing is perfect along the way, and honestly, if I look through our journey, the first iteration was very theoretical. We were still learning all the terminology ourselves. And at that point, I relied heavily on tools. I mean, our first version was before TNFD was officially adopted. So at that point, the tools were fairly limited. A map is a really, really good starting point. Just if nothing else, Google Maps will get you at least to find where you are. so version 1 was really theoretical. We relied heavily on maps and our carbon footprint for materiality purposes at that point. Version 2, which is our 2023 report, which was our first like real formal combination of TNFD and TCFD, we started digging deeper into our customer exposure, because as a bank, I mean, we're 250 people in Chester. It's a lovely place. It's a really boring place to write from a nature risk perspective. It's not such, there isn't anything great and exciting to write about in terms of droughts and floods for Chester. So all our main impact is going to be in what our customers do. And so 2023, we started mapping customers and then starting to dig into what do those locations tell us. And in 2024, our report that we released 2 weeks ago, we've taken our learnings out of 2023 and we've narrowed it down again. So we've gone from first report was kind of a very high level theoretical version. Version 2 was, okay, so this is how we're starting to make it real, looking at some of our customers. And then this latest one, we're now honing down into particularly material elements. So in this case, we've gone, dairy makes up about 20% of our loan book. So a very specific case study on dairy, and honed it down to Cheshire and Lancashire and Cumbria, and starting to just show how we've integrated the learnings over those 3 iterations. None of this is to say that we're doing this perfectly. It really is a learning. The one thing that we're quite adamant about is that it has to, when we say we integrate nature into our operations, it means that it actually needs, it's not for a pretty report. So it actually has to contribute to our decision making overall. And so we're embedding this into our credit process. We're mapping all our forms so that we can actually see what it means. And I expect my relationship managers to actually look at the map and report on what we're seeing. So that's been our experience. It does feel really theoretical initially, but you do need to do this for it to start feeling real and to be able to start making use of the information.
Really, really interesting. And I love the idea that's come from both of your answers, that it's about, testing, it's about piloting, putting something out there, gathering feedback and building over time. You're not going to have all the answers. Carolyn, could you expand at all a little bit? I think people will be really interested in what you were saying just at the end around how you really want to try and work with the relationship managers in the bank to be able to use this information. That's fascinating. Yeah, could you elaborate a bit on that?
I mean, when people say, how do you integrate nature into your business? I point out that with the sustainability team, there's all of 2 of us, but we report into our sales team. So we're part of our sales team and part of our relationship management team. And physically, if I turn my computer, you can see the back of our office. We like literally sit. My relationship managers is behind me, and in front of me is our credit team. So we're literally sitting physically in that space between the 2 areas. So what we do in practice is every customer these days is asked to give us a map, and we map the form. That gives us basic information around things like land use and flood risk and certain of the kind of basic elements. What I tell the relationship managers is the map tells us what the risks are. So if it's in a flood zone, we can see that. The question thereafter to the customer is, how are you managing that risk? And so we're mapping everything. From an indicator perspective, we're very, very focused on soil organic carbon as a proxy for soil health. And so we take the maps and we are having soil organic carbon assessments done on all of them. And we're starting to be able to take that data into our credit process. So we're starting to be able to say, look, this is the trend on soil organic carbon on a farm. Is this good? Is this bad? What should we know about this? And seeing how farmer practices is actually impacting those. but every credit application has to have some kind of narrative around that. And then we launched our transition finance product in February, and we've kind of expanded on that there. So now for the product, I ask evidence around practices on file. So we just keep collecting more and more information about it. And I think the one learning that we've had is you have to eventually identify metrics and indicators that make sense for your own business case. Nature, there is so much that you can measure in nature, and there is so much data available. But if you can't apply it, then you're back into, well, we're doing this for a pretty report, and that's not particularly useful. So we very much focus on trying to figure out which indicators we can actually fit into our business and make sense for our business. And we'll measure those. And I'm unapologetic about the fact that we'll probably not measure things that everybody else will be measuring, but it has to fit into our business case.
Great, thank you. I loved how practical that was. That really spelled out exactly what you do with the information. Great. Jess, let's come to you now. So I'm interested in how this differs for you. So you mentioned before the deforestation was a particular starting point for Generation. Could you tell us a bit more about that, please?
Yeah, sure. So that was coming out of COP in Glasgow. We were part of an initiative that set out to measure and manage portfolio exposure to deforestation. So we've been doing that for a good few years now. And then the TNFD recommendations, we'd been thinking anyway that actually we need to expand this and make this broader to capture nature in many other aspects. So yeah, the TNFD recommendations provided the perfect framework there. And for us, we manage portfolios across both public and private equity. So we invest in loads and loads of businesses across many sectors. So the first kind of real step that we could take practically to have kind of this overview of nature was to use a tool called the Encore tool. It's recommended by the TNFD. We found it very helpful, and it creates this kind of sector level analysis of the dependencies and impacts that we have in our portfolio, and that kind of guided the very early stages of our kind of more holistic nature positive journey. At first, it was very much the same as what Carolyn was saying. It was just kind of making a start and having a go. We didn't have enough data to properly analyze the private strategies that we have. So in our first year of reporting, we could only look at our public equity portfolio. It is where the lion's share of our assets were. So it did cover kind of most of our investments, but it was then good to be able to just, get that out there, have a go. And last year, we were then able to incorporate all of the private strategies as well. We've done a kind of firm-wide analysis at this point, but just to get started, we used the public equity data, which was great. And that initial analysis flagged that we should probably be looking more at water in terms of our dependencies and impacts. So that was our kind of big taking from Encore. It did also recommend a little bit of analysis on different forms of land and water pollution as well. So that was another takeaway. And then practically from there, after we had this analysis, we were able to start to build an engagement program. So we were able to look at our holdings and come up with a little bit of a strategy there to take things forward. But yeah, I guess I would just say it's so worth just having a go and not letting the perfect be the enemy of the good. Just getting started.
Great. And I think that probably the process that you've laid out there, it sounds very familiar to what we hear from lots of investors. So doing the first materiality assessment, prioritizing kind of one or two things to choose or to focus on. So for you, it's deforestation and water, maybe some of those aspects of pollution, screening your portfolio to figure out which holdings might be most exposed to those risks, and then thinking about how this informs engagement. So it's a very typical pattern that we see in the asset management industry. So I'm kind of interested in what happens next, to be honest. So has this been a valuable exercise for you or not? And how's that analysis basically helped inform action, or how do you hope it will in the future?
Yeah. We've already conducted a series of engagements based on the results. So taking those results from the Encore platform, then we were able to kind of because it's sector level, it's not company level. So our next step is always, we need to figure out what that means company by company. So we know the sectors they operate in have high dependencies or impacts, but then at a company level, we then need to do the research to understand how well or otherwise these companies might be managing these risks. So that was great. And we were able to do that first level of research with sustainability reports, CDP reports, other publicly available information. And then we were able to, based on that, kind of prioritize which holdings we needed meetings with and in what order. So we came up with then the list of companies that we were going to chat to. And we've had a lot of really insightful conversations around kind of water practices. And that's actually, interestingly, across a really broad spectrum of sectors. So tech and data centers has been one area, apparel and textiles, even pharmaceuticals, and that was more on the pollution side of things, but looking at kind of active pharmaceutical ingredients and pollution levels in water and things like that. So it's led to a lot of really interesting work.
Nice, really helpful. And I like hearing about how kind of those impacts and dependencies are mapped to different segments of your portfolio, so which sectors they tend to come up in. I just want to remind everybody, if you have questions as we go through this, please do post them in the Q&A function. It will manage to get to those after we finish the panel discussion, so do keep them coming in. So Diane, I want to kind of almost stick on this subject of investor engagement, and maybe we can do a bit of a role play here. So let's imagine one of your investors are asking you, how has your work in TNFD informed action for Reconomy? What would you say to them?
I suppose it's a couple of things. I guess on the direct kind of impact, and I think this is something that a lot of companies struggle with, where they're not in agriculture, or they can't see that kind of direct impact. So from our point of view, it's important to do something. So we have developed a bit of a sort of a budget around what would be an offset budget, for example. So offsetting our scope 1 and our business travel, and then I used sort of ETS, the trading scheme figures to sort of come up with a number, and then we've used that amount to work with. I think it's quite a sort of a unique agreement. I don't know why there isn't more of it, but we work with the Wildlife Trust and local landowners, local to our sort of original office. And we've done we've only done 2 projects with them so far, but we're developing another one, and that's around mitigation for carbon and for nature. So it's working with landowners. They provide the land, Wildlife Trust provides the expertise, and we provide some of the funding. So the last one we did was around dormice, and creating sort of a landscape level ecosystem for dormice, and improving sort of the corridors and so on. So that was a really good and practical example. And also the Wildlife Trust helped us to manage an area by our car park. It's not a massive area, but actually it's between 2 local nature reserves. So what they were able to say is, if you manage it like a meadow, that will hopefully enhance those other work that's being done locally. So that's been a really good relationship, and just being able to do something practical, and we've been able to involve our people as well, so volunteering, tree planting, hedge cutting, that sort of thing. So that's been great. And then I think in terms of we did do our double materiality at the end of last year, and I think one of the outcomes was really sort of in the supply chain, and really getting a better understanding of our risks, impacts, and opportunities in the supply chain, for our operational supply chain, and we have a large supply chain, so sort of over 12,000 suppliers, and we are actually working with an organisation called Just Impact, who are also part of, they're on the TNFD website, and they're helping us with sort of data-led and AI type intelligence to look at those dependencies, impacts, risks, and opportunities throughout the supply chains. We're really just kind of starting that process, but that I think that will really help us to sort of evaluate and assess those impacts are in the supply chain. Yeah, I think it's just, again, coming back to that being more circular, consuming less, using less, and enabling that to reduce our carbon, reduce our impact on nature. And if we can do that throughout the supply chain, then I think, you know, we can have a really big impact.
Yeah, excellent. And I think a lot of people struggle with the indirect side, the supply chain side. It's so much more complicated. Do you think you draw any inspiration from what you've done on climate with your supply chain, or do you hope to in the future?
Yeah, I think we hope to. As I say, it is early days with that. So maybe this time next year we can sort of report back. But it is, you know, it is early days with looking throughout the supply chain and just kind of, okay, like I said, it's a big supply chain. So where do we focus? And we've been going through a process. Most of what we've done has been internal, to be fair, and as with the other small sustainability teams. So everything we've done to date really has been internal. But then we have been working with GIST and with a smaller consultancy to help us just to frame, okay, where do we focus? Where do we look in that supply chain? And develop those strategies. So yeah, it is a little bit early days to sort of say what we're, you know, any concrete actions that we're going to have with our supply chain. But yeah, we have started the process.
Excellent. And I mean, it's the same across, I think, every sector. So a lot of the action that we see as the UK Consultation Group in terms of supply chain is businesses having a real urge to talk to one another, talk to the peer group, and try and coordinate on what we actually are asking for from the supply chain before you even think about engaging, because, you know, the suppliers have already had a lot of burden over lots of different things, and a large amount of that in climate. So agreeing together, at least, you know, what are the key nature topics that we're all going to focus on, and can we have a coordinated ask for the supply chain first? And of course, you know, what ways are there to support the supply chain as they think about transitioning as well?
Yeah, that'd be excellent next steps. Yeah.
Nice. So then, Carolyn, I want to come back to you now, if it's okay. And so, as we talked about at the beginning, so the financial kind of risk management and the financial benefit side of this for Oxbury was really like hardwired into your motivation from the beginning. So how do you hope some of this will translate into concrete actions across your business?
So part of what we're doing, and it goes back to indicators and metrics, is we're very focused at this point on finding ways of supporting the supply chain to find ways that there is this kind of coordinated action in what's being asked from farmers. They've within scope 3, farmers have been asked for a lot of information, and a constant complaint is the fact that everybody in the supply chain arrives with a different version of the same data to be reported. So one of our missions is to try and say, well, it doesn't matter what you've done for the rest of the supply chain, just give us what you've already done and we'll make this fit the world, which is why when we launched our transition facility, it relies very much on other evidence that farmers already have to hand and can hand to us. So we're very much focused around what's kind of the next iteration of indicators that we're going to be looking at. And that's very much facilitated by the fact that we've been consistently now collecting mapping data. And then from there, looking at what additional financial support that could mean for farmers. So we've got a framework, but it will look at what else we can do and how do we explicitly bring some additional support into the process. Yeah, so I mean, what I said, the other part of it that's of interest to us is around valuations of natural capital. We had a proof of concept study last year, and we learned out of it. I joke because I say our current report kind of consists of me going, we did this, we learned some things, and now we have a whole lot of new questions to answer. And that case study is very much one of those where we learned out of the initial proof of concept, and there's a whole lot of data that we'll need to try and get for that to really become useful in our world. But it's this iterative process, so small steps that eventually will hopefully give us something bigger.
Yeah, the valuation point is really interesting. I think that's the toughest part of this for a lot of different businesses. Like, how do you crack the valuation? So it's really interesting to hear that you're starting to chip away at that problem. Nice. So let's now open it up to questions from those on the line. We've got a good, healthy amount of time to get through them. So for everybody on the line, please do pop your questions in the Q&A function if you haven't already. And you can also have a look at which questions are already there, and you can upvote the ones that you're particularly interested in hearing answers for. So just looking at these, why don't we go with... so there's one question that says, have you as businesses integrated your nature and climate strategies together? So anyone feel interested, compelled to answer that?
Sure, I could jump in. We've created a combined climate and nature report, so we are integrating the two strategies. It's very much a work in progress. So we're not there completely, but we've taken the first steps, and you can see that if anyone's interested in the report on the Generation websites, the Climate and Nature report.
Excellent, thanks. Anything from anyone else?
I mean, we've taken a similar approach. I have a single, what's known as a natural capital policy in the bank, which combines climate and nature, and our reporting is combined as well. So very much integrated, both just at the same time.
Yeah, we've done the same. We've integrated nature with our climate strategy, and I think it's on our website. If it's not, it should be. I'll check on that so people can have a look if that's of interest. And the output is an action plan at the back of that, so that that takes you through the strategy, why we would be doing it, and then there's an action plan for our business and various sort of functions within the business to help bring it to life.
Excellent, thanks. And reflecting as well, I guess, on what we've seen in the broader environment of disclosures too, there's now about 100, just over 100 reports, TNFD-aligned reports, illustrated as examples on the TNFD website. And if you look at those, so this is a disclosure perspective rather than a strategy perspective, but there's roughly kind of a third that are standalone TNFD nature, a third that are integrated climate nature or integrated sustainability, and a third incorporated into annual reports as well, if that's helpful, thinking about how people are going about that. Okay, so top question. How are the businesses on the panel managing nature risk with respect to their own assets and own investments? So I guess that's one for you, Carolyn or Jess.
Like I mean, our own assets, we rent premises in Chester, and it's 11,000 square meters of it, square feet, in fact. So we assess it. We run, as a bank, we have to run business continuity exercises, and we've done some that looks at specific events, floods and heat risk on our assets. But because that's not as material for us, it's very much been around customers. And that has started with, let's know where they are specifically. And ours is different because it's farms. You can't just run this by postal code. You do need to have an actual map. And then it really is just, you have to start somewhere. We've mapped, I think, about 150,000 hectares now. So we're probably about 50% into our portfolio. And just iteratively.
Great, helpful. Jess, anything you want to add?
Yeah, sure. On the own assets piece, yeah, for us as well, primarily our impacts are in our investments, but on our own assets, we have tried to kind of go around things like refurbishments of our offices with a nature lens in mind. So we've been really careful to use kind of nature-friendly materials and natural materials where we can, and or options that would be like low VOC and things like that within our own kind of operations. But yeah, then mainly it is all this stuff on the investments. It's the encore analysis, it's the engagement, it's making sure we have a real good grip on where our impacts and dependencies lie through our investments.
Great. And there's another one in here for you, Jess. So let's stick with you. Have Generation integrated nature systematically into any public market strategies?
Yes, yeah. So I'd say the global portfolio, we're on the way there. Using the initial encore analysis, I think we've managed to get a really good grip of where nature impacts and dependencies are most material, and we've got this kind of engagement approach now. We know what kind of data points, and we've kind of got a benchmark of what we expect companies to be doing. So any new companies coming onto our focus list and things like that, we're able to kind of off the bat kind of analyze where that company is at and understand what we need to be pushing on in our engagements with that company. Oh, and I should mention maybe on the private assets side, we've got a natural climate solutions fund, which looks at the nature transition as an opportunity as well. So it's not a public market strategy. It's on the private side, but it's totally focused on nature and investing in companies that are going to enable that kind of land transition.
Interesting. Yeah. What type of solutions then do you find in that fund, or are you targeting? Could you give us any more details?
Sure, yeah. So it's a relatively new fund. We've made 2 investments so far. One is an eDNA company. So it's able to kind of look at the different species and environment, can be really useful for, well, companies interested in their own supply chains, but also kind of building companies, this kind of stuff. And we've also got an environmentally friendly pest control company. So it's a company that doesn't rely on chemicals. Instead, it's using RNAi as a form of pest control for certain agricultural pests at the moment, but who knows, it might be able to expand to other required pest control end users, like commercial kind of building stuff one day as well.
Nice. We always love hearing more on the opportunity side of things. So great to hear that fund's coming along well. So one for everybody. What advice do you have to people on the line on making disclosure practical and useful at the strategic level and avoiding reporting for the sake of reporting? Who wants to take that?
I'll go on that one, because that's been our mission from the start. I think it really goes back to materiality. You do need to be quite clear about what is material, and then choose actions and metrics that relates to the most material elements to what you're trying to involve. And if it is material, it should be able to then fit into your business strategy somewhere. If it's not if you're going to be collecting something and not able to use it in your business processes, then I would argue then you're not actually looking at the most material elements. And then there's the other part of it is take it slowly and just start doing something.
Diane, did you want to come in with anything as well?
Yeah, well, I totally echo really what Carolyn said. Yeah, materiality is the starting point, and if you get that right and spend the right amount of time doing that and planning that and getting some really good input, then it will flow from there in terms of the things that you're measuring and that you're focusing on, and therefore the reporting that you're doing should be strategically useful, and getting some really good management information that you can use to improve your sustainability generally, and support customers, again, depending on your business type. So yeah, just to echo what's been said.
Great. And so I guess in your case, I guess we're thinking about that action plan that came off the back of your work. And so, what's the experience been for you in terms of making sure that that's consistent with and integrated into your broader commercial strategy? Do you feel like it lines up well?
Yeah. Well, I mean, our overall business strategy, sustainability is fully integrated into the business strategy. So it comes from there. So we've got the business strategy, then we've got our sustainability strategy that are, you know, interlinked and dependent. And then from that, you know, climate was something that was material for us. And then integrating nature into that, and then those sort of actions have come from really developing that strategy and that plan to say, what, you know, how are we going to achieve this, what are the key objectives, what are the key aims, the targets that we've set, and then the data that we need to drive those targets, and the sort of key indicators to say how we're doing against those, and we report that progress on an annual basis.
Great, really helpful. So we've got another question here on data. So what are the most significant data gaps when assessing impacts, dependencies, risk and opportunities? And what steps are there to take to fill these gaps? I think you've all mentioned a little bit about data at one point in your answers. So probably an issue that resonates with everybody.
Absolutely. Shall I jump in first and then?
Yeah, please do.
Yeah, lovely. So we definitely had lots of data gaps, particularly because we rely so much on the reporting of the companies that we invest in. And actually it fed in really subsequent to our initial analysis using Encore. So we looked at water as an issue in the portfolio, as I mentioned earlier. And actually the first step in doing that company level research was to see where data was available, what companies had published. And for some of our portfolio companies, there was absolutely no disclosure. So that was kind of the first indicator that we needed to engage those companies as a priority, because we did have those data gaps. Some of our companies, and it generally was those ones who had already been thinking about this issue, they had put out kind of water efficiency metrics and these kind of things. And it was just kind of a testament to the fact that they were managing or starting to look at, you know, these kind of things. So it was a really nice way for us to prioritize actually that engagement order. If you hadn't disclosed anything at all, then obviously it was a company we needed to be chatting to.
Really helpful, thanks, Jess. Anyone else have any thoughts on data as well?
Charlie, I think the one thing around data is there's a lot of it around. There does seem to be an endless number of tools and potential data layers that you could use. And part of the challenge is actually to go and decide which ones is the most material or the most useful for you. I mean, I point out that most of the biodiversity indicators for the UK, so we're UK based, and there's any number of metrics that you can do, but the reality is all of them are going to get to exactly where I get to on a train trip from London to Chester, which is there's less biodiversity in the south compared to the north. Do I need a really fancy indicator to tell that? Maybe not. And so some of this is around really trying to make sure that the data that you do collect is that actually informs decisions, back to not just for the sake of it.
Yeah, really helpful. And I think it's probably helpful to remind everyone on the line as well that, you know, so I mentioned all of these example reports that we have, and the vast majority of them are focused on qualitative information. So that is where people are starting. They really want to get a handle on what are these most material risks and opportunities, and then actually jump straight to actions. Like, so the actions that we've heard you all talk about. So how can I start to manage them, rather than spending lots of time investing in really granular data and granular analysis before doing anything. So that's certainly what we're seeing. And more kind of broadly from a TNFD perspective, I think there's a lot of people who think, you know, doing a TNFD report means reporting against all 14 disclosures. It means doing all of the quantitative metrics that are in the guidance. That's very much seen as a long-term goal and where it's helpful and material for you. So if you're thinking about, should I get started, or what does it look like if I get started, you don't need to begin with, 10, 15 quantitative metrics. That's certainly not the, requirement, and it's certainly not where most companies are starting. Okay.
Makes anybody's feels better, Charlie. Sorry, there is a list of where I go, we're not reporting against this, we're not reporting against this, because we don't have data. So no, nobody should aim for all of them.
Makes sense. So there's a question here on credits. I don't really know if anyone has a particular view or particular expertise in credits, so it's fine if not, but we will ask it anyway. So do you have positions on double stacking biodiversity and carbon credits as a way to maximize the economic viability and therefore investability of natural capital projects? Anyone, any thoughts on that?
I mean, I'll jump in. We don't do formal carbon or biodiversity credits. But I mentioned about the work that we're doing with Wildlife Trust and landowners in Shropshire, in the UK, and that is effectively double stacking, because it is nature and reducing carbon emissions over time, or sequestration, I should say. So yeah, and that does, yeah, like I said, we sort of developed that off an offset pot, if you like, for our carbon offset. We don't, I think, because of some of the controversies around it, I think we just wanted to do something where we could manage it, and we could see the outcomes, and sort of, like I say, are people go and volunteer there, so we know it's, we know it's there, we know it's real, we know it's happening. Yeah, so that's the way we've chosen. So I think it's a great idea if you can integrate nature and climate with any of these sort of credit type schemes. It's just, yeah, obviously being careful about which ones you go for and their gold standard and everything else. Yeah, that's how we've done it to date.
I would completely echo everything Diane says. We buy offsets as a firm. It's not something we have a very formal position on at this point in time. And we do look at the co-benefits. So we do look at kind of nature and things within those. Right now we use a consultant who are expert in this field to kind of advise us on what we should and shouldn't be buying, to your point around kind of quality as well. So that's the way we approach it. It's not really a formal position yet, though.
I mean, we're very similar. We have invested in woodland offsets in the UK, and to Diane's point, it's in the UK and it's trees, with the idea that if we want to check if they're there, we can go and look at our trees, and they all come with a biodiversity benefit as well. Charlie, I think the other point that I make quite often in discussions around biodiversity offsets and similar, and Diane illustrates it beautifully, is it's a lot easier to go to a board at this point. Boards it took us 10 years to explain a ton of carbon to boards. Ecosystem services and things it's hard at this point to get boards to understand this. But if you arrive and you say to them, there's a project, it's going to help with dormice in our region, they're happy to support that. And so for me, a lot of the conversation around offsets and credits at the moment around nature is boards generally wants the narrative and the storytelling and the tangibility of what this is going to do.
Really helpful, thank you, and really interesting to hear the way in which that conversation has played out in each of your different organisations. I should say as well, from TNFD's point of view, there's no formal position on credits and the use of biodiversity credits. So there's some mention within the guidance, and it generally points to other organisations like IAPB that are doing some really excellent work in this space. So yeah, if you're thinking about how does this interface with your TNFD guidance, there's kind of no set rules around it. So our final question that we have today is, how do you frame nature risk so it drives real commitment, not just awareness? I might provide a few views on that of what we've learned from the UK Consultation Group. And then if anyone wants to jump in on top of that, very happy to. But I mean, there's lots of businesses that are, just as Carolyn has just said, trying to have this conversation at board level and trying to understand how can we really speak in a language that the board's going to understand. And so I'd probably have two pieces of advice for you. One is make it practical. So the more kind of theoretical or forward-looking risks are, the easier they are to dismiss or feel like they're not material today. There are tons of practical, empirical examples we have of businesses across all sectors that have faced real nature-related risks and seen financial impacts as a result. So the more that you can connect it to empirical results from peers or similar types of assets, that's going to be really helpful. So try and make it as tangible as possible. And the other side of it is, I mean, speaking candidly, risk gets you so far, but opportunity is going to get you a lot further. So you can talk about the risk, but if you could talk about as well the upside from taking action to manage that risk, how you can build resilience back for the business, or if there's a commercial angle to getting started on nature, that's going to resonate really well. And we've seen that across lots of different examples from companies all across the UK in lots of different sectors. Anyone else want to jump in on top of that?
I mean, I think in practical terms, it just takes time for people to get used to the language and then to the real practicalities. I mean, a good example that I've seen recently in our world was we've always, when I train, I kind of go, well, in the southeast of the UK, we're going to have drought is going to be an issue. When you do a credit application in the southeast, ask about water on farm. And there's nothing like a drought to suddenly, in the last few months, every credit application in the south where it's heavily water dependent, so vegetables and trees, there's suddenly my whole credit committee and my relationship managers are writing long scripts about what's happening with water on that farm. So some of this is really practical, and you have to kind of explain the theory and then have people, it will become practice.
Really helpful, a good practical example there. Okay, well, I think that brings us to the end of our session for today. So all that remains is, well, a quick reminder actually for anybody on the line, if you are a business that is considering potentially starting TNFD reporting and you're interested in joining this year's cohort of adopters, TNFD will be announcing the new adopters for 2024-2025 at COP30 this year. So that's in November. So the deadline for registering is the end of October, 31st of October. So if you do have any questions around what adoption means or what that process looks like, please feel free to reach out to myself or any of the team at the UK Consultation Group. And you can find all the details on the website, and you should have it from our emails too. And beyond that, all that remains is to thank our wonderful panelists for all of your really insightful inputs today. It's been really helpful. And to thank everybody on the line for coming along and spending an hour with us. I hope it's been helpful. So thank you very much, everybody, and have a wonderful rest of your day.
Thank you.
Thanks, Charlie.